What's going on, guys? We got top four option plays for next week for earnings. Remember, when earnings season is coming around and stocks are reporting earnings, implied volatility is very high, which means it's great for us as option sellers to collect some really nice premium. So let's get right into this list. The first stock is going to be Dave and Buster's reporting earnings Monday after the market closes. And as you can see, Dave and Buster's it's been doing pretty well over the pandemic. It's recovered from all the way from under $10 per share, and now it's 43. I do hold some of these shares of Dave and Buster's in my long-term portfolio, but right now it's kind of in this consolidation period, which is pretty good for selling some options. So you could either do what I would recommend is selling some cash here puts if you want to own some stock at a cheaper price, or an iron condor, because as mentioned earlier, uh, Dave and Buster's is in this consolidation period, which is going to be a nice play for an iron condor. So what should we be looking at? As you can see, premiums are pretty nice here, and we can collect some really nice premium, a 2% this week with a $39 cash carry put, 79% chance of profit. So really nice chance to make some money here. So if you have a $20,000 account, you could sell 5 of these contracts, collect $20,000, or sorry, collect $380 of credit, putting down $19.5 of collateral. So if you don't have as much capital to throw into this, you could also do an iron condor. And what it is you're doing a put credit spread as well as a call credit spread at the same time. This is advanced option strategy. If you're not familiar with it, definitely do some research before opening it. But so let's do an example here of what an iron condor on this stock would look like. So since we're already on the put side, we're going to be selling the $39 strike. I like that strike. And then we're going to be buying the one under it, the $38 strike, and we're collecting a credit of $14. Now let's head over to the call side. We're going to be selling let's see what looks good, maybe the 47 strike, and then buying the one above it, $48 strike. As you can see, we are shorting an iron condor, we're receiving a credit, and we're putting down $100 of collateral per contract. So say you have $1,000 in your account. You could do 10 of these contracts right here, collecting $380 using only $1,000 of collateral, which is pretty nice. Very good setup here. And overall, this is a better way to grow a smaller account if you don't have as much money to put down as collateral for a cash cleared put. Remember, the downside is you can lose your entire collateral with an iron condor. With a cash secured put, the downside is you own 100 shares of stock. So it's definitely not safer for a cash secured put because it's a win-win situation either way. So that's going to be our option strategy for Dave & Buster's stock. Next up, we got Micron, which is reporting earnings Tuesday after the market closes. Micron, really solid stock. It has a high volatility, but as you can see here, overall, past 5 years, get rid of all that volatility, and the trend is upwards. So just buying shares, honestly, just buying 100 shares, selling covered calls is going to be a really nice play. Or if you're not into the stock already, selling some cash secured puts would be nice as well. But as you mentioned earlier, it does require 100 collateral equal to 100 shares. So it is going to be pretty pricey. But something that I do like would probably be the $7 strike. Really high chance of profit at 83%. And we're collecting about a 1%, over a 1% return in 1 week. So which is going to be pretty sweet. So I'm really looking forward to this play right here. And then next up, we got Chewy, reports earnings Tuesday after the market closes as well. Chewy, it's a pretty volatile stock. It's been on a downtrend for a while, so it is due for a nice rebound. A lot of people during the pandemic got pets, and Chewy is not the granola bar company. It's actually a pet company. It sells a lot of pet resources like food, toys, and all stuff, medications, treats. Basically, tons of products and services for dogs, cats, and all these other pets. So Chewy, simple stock. We're just gonna be selling some cash here puts. I like selling puts on this stock just because Chewy generally has a high implied volatility. And remember, higher the implied volatility means the higher premium we're gonna get paid. So we can go pretty far down the strike prices as you can see here. Current stock price $45 per share, and we can collect some really nice premium just by going far down the strikes. Something like honestly, a $37 strike, 85% chance of profit, and we're collecting almost a 1.5% return in a week, almost a 2% return, which is pretty sweet. I really like this contract right here. High implied volatility, as we mentioned earlier, so we just have to be a little bit careful. But we're collecting a lot of premium, which is pretty nice. So next up on our list is going to be Blackberry reporting Thursday after the market closes. This is a controversial stock. It's a short squeeze stock, just like AMC and GameStop. Blackberry, as we can see here, it's basically back to where it was before the pandemic. So if you are if you believe in this company, you can just buy and hold shares, sell some covered calls, or even just buy leap options for this stock. So something you could do, since this is a cheap stock, you could go to like a 2023 expiration date, buy some call options, and as we can see here, it's only going to cost you like $100. Very, very cheap. So you could do that. Or if you want to just sell some puts, you can. People for smaller accounts, this is definitely the stock for you because it only costs $7 per share. So what we can do is a $6 cash secured put, collecting $6 of credit. And that might not seem like a lot, but $6 on $600 of collateral, that's a 1% return in 1 week. And if you do 1% return per week for 52 weeks, you're going to be having a 52% return plus because of compound interest. And a 52% return per year is definitely going to be very substantial for your account because every 2 years you're basically doubling your money. So this is a really nice contract here. $6 cash gear put, or you could just buy and hold shares and sell some covered calls as well. The wheel strategy is our favorite strategy. Selling options on earnings is very profitable just because premiums are very inflated. There's a lot of people buying calls and puts, but we as option sellers take advantage of this influx of buyers and we sell options to the buyers instead. So that's about it for this video. 4 options plays, 4 stocks we got here. Really nice setups here. Not too many companies are reporting earnings this week, but we do have some particular ones that we're looking at. So thanks for watching.